Friends, you are welcome to my YouTube channel AKD Global Education. Don't forget to subscribe this channel so that you will get notification of new videos. Please press like button. It will encourage me to make such videos in future. Today I shall discuss on a very important topic, mutual fund. Understanding mutual fund before putting your hard-earned money into it is very essential. What is mutual fund? Mutual funds are the investment products available to investors in asset class of choice, like equity, debt, gold, or real estate. Each product offered by mutual fund is called a scheme or fund. Let me discuss some features of mutual fund. Here, investors get the services of professional fund manager. Professional fund manager evaluate and select securities, creates and manage portfolio, review and rebalancing the portfolio based on performance of the portfolio. Some securities may not be available to retail investor, which are placed to institutional investor only. Mutual fund provide access for investment also. Mutual fund offers tax advantage to investors on returns earned both for income and capital gain. It allows investors to participate in diversified portfolio even with a small investment. It gives investors flexibility to structure the investment in the form of lump sum or periodic. It also gives returns as dividends or appreciation. Let me discuss how it works. There are multiple entities involved in the activities of mutual fund. All these entities are regulated by SEBI. A mutual fund is set up by a sponsor who is the promoter. Trustees are appointed to take care of the interest of the investor. An asset management company, in short AMC, is appointed to manage the activities related to launching a scheme, marketing it, collecting funds, investing the fund, and enabling investor transactions. Let me discuss now few terms with respect to mutual. When mutual fund units are first offered to investor, it is called NFO. In full form, it is new fund offer. There are two types of mutual funds: closed-ended mutual fund and open-ended mutual fund. In case of closed-ended mutual fund, it does not allow further subscription directly from mutual fund post NFO but could be bought from other investor on the stock exchange. Whereas with respect to open-ended mutual fund, investor could subscribe to additional units post NFO directly from mutual fund at market. What is SIP? Investment in mutual fund can be done in a lump sum or in a periodic installment called systematic investment plans, in short SIP. Withdrawal of money from mutual fund is called redemption. With respect to closed-ended fund, withdrawal of money can be done only on completion of tenure of the fund. With respect to open-ended fund, money can be withdrawn either lump sum or periodic anytime at market NAV. What is NAV? NAV is the short form of net asset value. It is the value of each unit, reflects the value of the securities held by the scheme after adjusting permissible cost of mutual fund. Risk and returns from mutual fund will depend on the asset class in which the funds are invested and strategies used to manage the mutual fund portfolio. Now I shall discuss types of mutual fund. To make this video very short, in this video I'll discuss equity mutual fund, debt mutual fund, hybrid mutual fund, and balanced types of mutual funds shall be covered in part 2 of mutual fund. Now let me allow to discuss the equity mutual fund. In this fund, investment done predominantly in diversified portfolio of equity instruments. Equity mutual fund earns return from dividend declared by the stock which are held by mutual fund and appreciation or depreciation in the value of these securities. Equity mutual fund can be classified based on type of securities included. It is called large cap fund when invested in large cap equities. It gives stable return and low risk of volatility. It is called mid cap mutual fund when invested in mid cap equities. It is called small cap mutual fund when invested in small cap equity. Mid cap and small cap mutual funds generate better return when market is on upward movement. but also generate loss when market is on downturn. They are having high volatility with respect to return. Some funds close to invest in particular sector or theme. This fund is called thematic fund. They do better if particular theme or industry perform better, but also performs badly if particular theme or industry perform poorly. Index fund mutual fund replicates the investment of an identified index, say Nifty 50 or Sensex 30. Their returns closely track the returns of index. Now let me discuss debt fund. Debt funds invest in debt securities issued by governments, companies, financial institutes, banks, and others. Returns from debt fund, primarily from interest income earned on the securities held. Returns can also have a component of appreciation or depreciation depending upon securities held. Primary risk of debt fund is the credit risk due to default risk by the issuer of security. Debt fund can be categorized based on type of securities held. In overnight fund, investment is done in securities with tenure not exceeding 1 day. In liquid fund, investment is done in securities with tenure not exceeding 91 days. They are suitable for short-term parking of fund. In ultra short-term fund, investment is done in money market and short duration securities having duration between 3 to 6 months. In low duration fund, investment is done in securities having maturity duration between 6 to 12 months. In short duration fund, investment is done in securities having maturity duration between 1 to 3 years. In medium duration fund, investment is done in securities having maturity duration between 3 to 4 years. In medium to long duration fund, investment is done in securities having maturity duration between 4 to 7. Finally, in long duration fund, investment is done in securities having maturity duration more than 7 years. In corporate bond fund, at least 80% of portfolio is invested in debt securities of corporate sector. In yield fund, investment is done in government securities. Here is no risk of default and liquidity is very high. In floating rate funds, investment is done primarily in floating rate debt instrument where coupon rate moves periodically up or down. Fixed maturity plans, in short it is called FMP, is a closed-ended mutual fund. Investment is done in debt securities having maturity that match the term of the scheme. It eliminates the risk, interest rate risk or price risk if held till maturity. Now I'll discuss hybrid mutual fund. In hybrid mutual fund, investment is done in combination of debt and equity securities. Here, risk and returns of the scheme depend upon the allocation to debt and equity and how the fund managed. Different types of hybrid funds. In conservative hybrid funds, minimum 70 to 80% is invested in debt and 10 to 25% in equity. In aggressive hybrid funds, 65 to 80% is invested in equity and 20 to 35% in debt. In balanced hybrid funds, 40 to 60% is invested in equity and 40 to 60% in debt. In dynamic asset allocation funds, investment is done both in equity and debt. Here, allocation managed dynamically based on performance of the fund. In multi-asset funds, investment is done in at least three asset classes with 10% minimum allocation to each asset class. With this, discussion on part 1 of mutual fund is completed. Please see next video which shall cover balanced type of mutual funds like solution oriented funds, funds of funds, exchange traded funds, gold ETFs, arbitrage funds, real estate mutual funds. Thanks for watching this video. Don't forget to subscribe this video. Please like this video and forward this video as many as possible.